A lot of you that follow this channel are trying to learn how to trade in the stock market, which means that you probably have an account that's valued under $25,000, which also means that you probably fall under that pattern day trader or PDT rule. I'm going to tell you how I was able to overcome that as a beginning trader coming up. What's going on, guys? Welcome to Own the Chaos. My name is Brad, and today's topic we're going to be talking about the PDT rule or pattern day trader rule. Lots of folks have been coming up to me recently and asking me about this and what does it mean, because they don't want to get in trouble or they don't want to get their account suspended. So it is important to know and important to keep track of when you have especially a margin account. So let's start off with the basics. What is a round trip day trade, and how does this apply to you if you have under $25,000 account and the PDT rule applies to you? So let's just say you want to buy Apple stock on Monday and you buy it here. And then let's just say 20 minutes later, or even within that same day before the market closes, you sell it. That's considered a one round trip day trade. You can only do that 2 more times within a rolling 5-day period, okay? So let's just say you buy Apple stock on Monday, but then you want to sell it on Tuesday. Is this a round trip day trade? No, because you bought it on one day and then you sold it on the next. You're safe. You don't have to worry about keeping track of any day trades at this point because you didn't make any. Now, let's just say I really like Apple and I've been making a killing on the lows and the highs, and I've been really doing great at identifying supports and resistances and getting in and getting out quickly. And I say that I want to buy and sell on Monday, and then I want to buy and sell on Wednesday, and then I want to buy and sell on Thursday. You're done. You can't sell anymore for that week. So if you buy on Friday, you can't sell on Friday. Otherwise, you could be subject to a 90-day suspension depending on how your brokerage handles this. So then a lot of people ask me and they say, Brad, how do I, keep track of all this? How can I avoid getting suspended for 90 days? How do I avoid violating that PDT rule? And for me personally, how I started and how I was able to get myself to a point to where I didn't have to worry about it anymore was starting off with a cash account. And a lot of people are kind of like, yeah, give me a break. It's such a pain in the ass because I gotta wait for settlements and all that good stuff. But trust me, I'd much rather wait for money to settle than getting my account suspended for 90 days. It just makes it easier. If you're super disciplined and you can keep track of all this stuff, fine. But when you're first starting out, your head's spinning and you got so much other stuff to worry about, if you don't have to worry about potentially getting your account suspended for 90 days, for me, I think that's worth it. And if you follow that similar strategy of trading that I do, which is swing trading, you really don't even have to care too much about settling funds or anything like that if you have with a cash account, because you're swing trading. So most of the time you're holding this, for a few days, and by the time that few days is up and you're ready to sell, that money is instantly available for you to use again. And if you don't know what I'm talking about with a cash account, I'm talking about that T+2 rule, which means, so if you look this up, it's actually, let me erase this real quick. I'm running out of room. That's better. All right, so T+2, okay? T+2, so this is for cash account. So if you have a cash account and you buy a stock and you sell it in the same day, that means that you have to wait for the trade day plus 2 more days to be able to use that money again. So let's say that I buy Apple stock on Monday, okay, and then I sell it on Monday. I complete that day trade. I can't use any of the money that I used for that trade until Thursday when I want to buy again. But there's ways around this. So if you have a let's just say maybe even a little bit bigger of a cash account, maybe you have $5,000. How that I was able to work around this was I would take smaller positions, so maybe $500 to $1,000 positions when I was buying stocks, and I would kind of keep them rotating a little bit. So I would only use smaller positions and then keep some money available in case there was a nice catalyst that I wanted to make sure that I got in on. I always keep cash available to make trades because of this. When you have a cash account, and this is something that you have to worry about, it's kind of a pain in the butt, then that's how you kind of work around that. It might seem like it's a little bit of extra legwork, but trust me, it's worth it, and it's much easier to have to worry about something like that than worrying about whether or not you made a day trade, how did you keep track of them, because really the brokerages are really bad at keeping track of that kind of stuff for you. So they hold you responsible for it, and you know, really with like I said, with everything else that you have going on, it's just one less thing that you have to worry about. The nice thing is that if you bought on Monday and you sold on Thursday, Friday, those funds are still. The nice thing is that if you bought on Monday and you held that stock till Thursday, made some decent money, you can use that to buy again on Friday with a cash account. Now this might sound like a lot of work, and it is, but trading in and of itself is a lot of work. Nobody's gonna get rich overnight. It doesn't happen like that. You have to work to get your account to a point to where you don't have to worry about, you know, dealing with PDT all the time. I tell folks, you know, just use your cash account until you can get to a point to where you're over that $25,000 hump, then open a margin account, and then you can day trade till your little heart desires. But for me personally, I don't even day trade all that much anyway. So am I worrying about it that much at this point and the type of strategies that I use and that we implement within WeTrade HQ? No. Which reminds me, we do have a free platform for folks to be able to learn and trade and celebrate each other's success. It's called WeTradeHQ.com. The links are in the description. I also provide a mentorship that I go live with folks during the trading morning from 9 a.m. to 10 a.m. Eastern time, and help people kind of adjust to this type of thing and learn how to trade and work around stuff like this. If you're just starting out, I think it's a great way to do it. I think it's a great way for people to learn with little risk involved, and people seem to really enjoy it and have found success within my mentorship program. So feel free to check that out. The links are in the description below. Guys, if you found this helpful, I certainly would appreciate a thumbs up. And if you're not following me, I certainly would appreciate a subscription if you want to see more learning content such as this, or my midday market recaps where I go live every day with all of you guys and show you how we were able to find success in this crazy world we call the OTC. So guys, with that, thank you so much for joining me today. And as always, I will see you all before the bell, and B. Smith is out. 25. Got spit stuck in my trout.